following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote here is by Unknown. To start a better life or a better world or a better future is to simply believe that it is possible. Market-wise, let's take a look at it out here. We have the Dow Industrials up 158. NASDAQ is up 26. S&Ps are up 9. Gold contract down $30.50, trading at $1,255 an ounce. They're whacking gold, they're whacking silver, but guess what? They can't get the gold and silver equities down. We're going to talk about that. It's pretty wild, folks. Silver down $1.20, trading out at $16.87. Platinum off 33 bucks at $1,221. Copper down 2.5 pennies at $2.45 a pound. Light sweet crude flat at $44.55. Bonds, you have the 10-year down 11 ticks at 130.03. 30-year off 30 ticks, almost a full point at 150.08. King dollar up 298 ticks, trading at 95.02. The euro is up 21 at 113.09, and the yen is up 87, trading at 118.41. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We bring this future S&P up. What you're going to see out here, folks, is this. What we've done thus far is that we're coming up to the downdraft of yesterday. Bottom line, thus far, it doesn't have the juice to get up into a higher price. We put this up. Let me put this back for a couple days here, and you'll see how this shakes out. Okay. So what we have is this. At 3:30 yesterday afternoon, you're going south on the way down. And what we have, we take a look at the S&P, the E-minis, the contract structure. What we have is that we're 2009 right now, and when we came down yesterday, we were coming down right off this level at 3:30 in the afternoon, 15:30. We came down off the 2011 level, and we came down off that level, folks, with 74,000 contracts. Yeah, 74,000 contracts. Thus far, what we're doing is this: is that this last little bar up here, we just went up with 23,000 contracts. So you can see what you have here. It's counter-trend bounce. Coming into it, you can expect that the 2011 will not hold. That's how this shakes out. That's ice, by the way, okay? As we're coming up to it, the top of ice, well, the top of ice is 20116. I don't think we're going to see that, though. And the reason being is that if you take a look at your first downdraft yesterday, which was at 1430 hours, 1430 got you into the 210 level. You bounced up to the 220 level, and then it gave it to it, and it gave it to it in a big way. And the top of that is the 2016, but it's hitting this bottom, and the way it's hitting this bottom, it just doesn't seem to have the juice. 877-927-6648. Let's go to the gold contract. So what we have out here, folks, this is pretty wild. This is as wild as you can get, and this is what it is. We bring this up. What you're going to see is that they took apart the gold contract out here today. Gold contract right now is trading out at $12.55. We pull back, and how we pull back with lighter volume. Gold contract out here today is trading 63,000 contracts. We're down $30, big price spread. You're going into 289,000 contracts. This is really cool, folks. And what's cool about this is this. So check it out. The difference is pretty amazing just in the structure of it. What you do have is that you're basically going from one future to the next future. There's no two ways about that, which makes a difference, okay? Because what we're doing is we're coming into the J contract. J contract has some juice out here. Bottom line is that transfer, if we go over and we take a look at the actual equities, the equities will not move, which is just amazing. If we go to Wrangle Resources for GOLD, you're going to see you're pulling back on dramatically lighter volume. And this is right across the board, by the way. Wrangle's pulling back 59 cents at 625,000 shares versus 2.2 million. What does that say? Says a couple different things. I've seen this phenomena before, and what does happen is this, and this is where the heads up comes in. I've seen the equities hold even when gold gets smoked like this. You get smoked like this for a few days, then they won't hold. That's the bearish part of it. The bullish part of it is when they hold like this, if we flip this around in the next couple days, you're going to see a much larger ABC structure in the way up. That's how they seem to be trading out at this particular point. So we'll see where this whole thing does shake out. Let's go to Tom in Tampa. Hey, Tom, what's going on?
Hey, Tom, how you doing?
I'm doing great. You having a good day out there?
Oh, yeah. Blue skies today, blue tomorrow.
Oh, it's beautiful. Folks, it is so beautiful right now in Tampa, St. Pete, and Clearwater. It's amazing. I mean, it's like 65 degrees out. Clear as a bell, as Tom just said. I mean, big time, too. So,
gotta love it.
Big time. So, we're looking at it big blue?
Taking a look at big blue, Tom. It busted through that 150.50 area today. It got down to 149.52. So it took out that 150 area today. Did we get enough juice behind that?
Let's take a look. Thus far, we get 6.5 million. The last swing low that it was going after, folks, had 6.7 million. Yeah, so that's saying it'll get back down there. It's rejected the lower price at this point. But guess what? When you do a test, and that test is on heavier volume, which we're going to have, that sets up, number one, a retest of that area. If we take a look at this and we put this on let me just put this on a daily first, and we'll put this on a weekly. Let me put this on a weekly. So on a weekly, what we have, there she is. On a weekly, the last time we were down here, we had 34 million shares, and we're probably going to do, well, it's going to be interesting on the weekly, Tom, because on the weekly we might do less. So what we'd want to see is this. The weekly thus far, if it stays around this 154, that'd be saying, yeah, it's be back down there. What we don't want, because I know you're looking for IBM to go lower, I believe, because of the option position you have, right?
Right.
Okay, cool. So what you'd be looking at is that you don't want this to close at the higher range, and the higher range inside this on a weekly basis, because thus far, the way that it's set up, it's not a hammer at the bottom, because what you have is that the high for the week here and IBM, folks, is 154. The low is 149. It closes right here. That's saying, yeah, we'll test the bottom. If it closes up at that 159, it could be you'd get a much bigger bounce. You'd get a bounce up to this 161 area.
Right. Okay.
Cooking, brother.
Thanks, Tom.
Have a great one, man. Have a safe one. And what you can expect out here, folks, I know. Let's go over to the oil market. So the oil market, folks, we take a look at the oil market. Let's see, where are we? We take a look at this oil market. This is what you have. Where is she? There she is. Crude oil. Okay. So crude oil right now is trading 44.60, and it's got to another lower low out here today. Now, the volume's lightening up on crude oil, so it'll be interesting to see if it can get a sign of strength. Thus far, it hasn't got a sign of strength. If you go over to ExxonMobil and Chevron, they're going lower, man. It's pretty sick. Exxon's down 97 cents. Volume's coming out of the stock today. 17 million shares. You're coming into a swing point that has 26 million, and it's hanging right at that swing. You have 3 separate swings on ExxonMobil, all at those lows that have some juice on them. Chevron is actually giving a bigger indication that more trouble is going to be coming in that oil patch. And what Chevron's doing is this. Chevron is down $1.30. You have 10 million shares traded, and that's coming into 13 million swing low. So in general, that is basically saying, and the XLE has been pretty good about the acceleration on the way down prior to oil getting down to lower price. This is Tom O'Brien. This is TFNN. Dow Industrials right now are up 153. You get the NASDAQ up 25. S&Ps are up 11. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over $70 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials right now up 179. Nasdaq's up 32. S&Ps are up 19. And as we do each and every Thursday, folks, we get our man, Mr. Andy Hecht. And don't forget, folks, Andy has an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Absolutely fabulous show. And at TFNN, folks, okay, we broadcast live every trading day. We start at 8 o'clock in the morning. We go to 6 in the afternoon. You can get all that programming right on your cell phone. All you do is you put TFNN.MOBI. Now, as you're over at Tiger TV and TFNN, folks, you're going to see our man, Mr. Andy Hecht, right on the front of the carousel. And what is this all about? It's a free webinar with Andy Hecht. And what are the energy technomentals telling us, okay? So check this out. It's right on the front page. You can be out here growling and prowling with our man, Mr. Andy Hecht. Andy, what's going on? How you doing? Okay, well, we will get him back. There he goes.
Hello.
Hey,
hello.
How you doing, man?
I'm sorry, a little technical difficulties there.
That's all right. That's
I'm back from skiing in one piece.
That's a beautiful thing, man.
I'll tell you, it was windy and icy, and thank God I grew up in the Northeast, so I can handle that.
Because that's unusual out west when it's icy, right?
It was icy and windy, and
that's too bad because you go out there so you don't have to deal with that, right?
Hey, I had a good time.
I bet you had a blast, man.
It was great, and you know what? Icy, you go faster.
I love it. Well, as they're going faster, man, this market is some heavy volatile trading out here.
Wow. I mean, it's deflation and divergence.
Yeah.
Right? Yeah. All over the place. How about gold and the gold equities today?
Listen, man, it's so weird. It's amazing. And what we're talking about, folks, is that you have gold down $30, silver's down $1.17, and guess what? These gold equities, they're down 20 and 30 cents, but they can't whack them, man. It's pretty heavy.
Silver, man, crazy.
Yeah, I know.
Wow.
And
unbelievable.
Hey, we'll see where it shakes out. I mean, see
where it all shakes out. I don't know. The interesting thing for me, I watched the Fed announcement yesterday.
Yes.
And the takeaway for me is patience, right?
Yes.
They said patience.
Right.
What does patience mean? To me, patience for them means, the dollar's rallying. We can't raise interest rates or it's going to fly. They're worried about that.
They are. And, well, they brought up what they did yesterday, of course, folks, is they brought up the international aspect. Well, yeah, I mean, that's real. When Europe has negative interest rates, how do you basically say you're going to raise rates, which they have been saying for quite a while, but the reality is that they haven't done it. They're pretty soon they're going to start calling Fed Draghi, because
I think Bill Gross got it right. I think that we're going to see a 1/4 rate hike sometime in the second half of the year. That's going to be symbolic. More symbolic than anything. And 1/4 is nothing in short-term rates. But it's going to be symbolic because they've said they're going to do it, so they're going to have to do it. But I thought that the most interesting thing about the Fed meeting was that the announcement and the decision was unanimous, whereas it hasn't been in past months.
That's a fact, no doubt.
So very interesting. They are certainly worried about the rest of the world. I mean, this Greek election over the weekend was a watershed event on a number of levels. First of all, they're going to try to renegotiate their debt. They're going to do everything they can to do that. But there are so many countries in the EU that are in worse shape than Greece. It'll open the floodgates. So the Germans and the Dutch and these others, they can't allow that. It's a very interesting situation. And politically, this new government seems to be cozying up to the Russians.
Well, I would say yes and yes.
It's a very interesting situation.
My take on at least the Greek government and the people there is that they'll take as much, they've taken bread for quite a while, and the sooner that they dump the euro, the better off they're going to be,
Right.
I mean, that's, because what happens, folks, is this, is that picture something. See, they're so big. You remember, like, when Donald Trump was going BK a million times, right? What happened is that he was so big that the banks basically, were saying, oh, man, hold on, they're going to lose too much money.
Right.
So he BK'd the companies, okay? He's the only guy I know in the gambling business that has BK'd 2 or 3 casinos. It's like, really? It's like amazing, actually. But anyway.
Yeah. And Greece, Greece is in ruins, right?
Yeah,
but,
and
that's the attraction, isn't it?
No, and what happens, okay, is that they can't afford to let them go, because then everyone else will go and realize how cool it is not being in the Eurozone.
I mean, exactly. You got countries like Bulgaria in there, and I mean, you got problems because these guys, if you look at the economic statistics about some of the really weak EU members, man, Greece looks good by comparison.
Yeah, and see, what happens is this, folks, okay? If you stay within your own country with a currency, right? Great, you got it made. Where you do get hurt, and the Greek people would get hurt, is their currency would be worth less money going to other countries. But guess what? Greece is beautiful. I mean, they can sit around and groove and have a good time. So
go to the islands.
Totally.
I mean, it's a beautiful place. I've been there many times, and the tourists are not going to stop coming. Actually,
they're not.
The tourists are going to come more now because it's cheaper.
That's right. That's right.
So it's a very interesting thing. I mean, I think the really interesting dynamic is their anti-Russian sanctions thing. I mean, he's filled his cabinet, the new leader, with a lot of kind of left-wing radical kind of element in Europe, even more left-wing than the usual European kind of.
Well, they have. I mean, there's a communist party there. The prime minister's a communist. So, I mean, that's,
Yeah. It should be it should be interesting, and you know what? The dollar should continue to rally. I just think that the dollar looks so good here, and I'm glad that it's slowing down, but it's not giving anything back, Tom.
No, it's not. It's
not. It's a very nice, slow and steady, non-volatile rally, and it's telling us something. Our economy is strong. It's doing well here.
There's no doubt. And there's plenty of questions out here, folks, to get as to the aspect that the stock market is volatile now. It's been up, by the way, 200% since the lows, folks. And how can the stock market pull back and the economy, be good? That's easy.
It's priced in. That's what it is. It's priced in.
And it's easy, too. There are so many people that aren't in the stock market. I mean, the whole world's not in the stock market, folks. That's what it comes down to. It's like,
The one thing that the stock market in the U.S. does have is the whole retirement account.
Yeah.
Every month, money comes out in IRAs and 401ks, and it is invested. So there is a natural buying in the stock market on a monthly basis.
There is.
So, and there's not natural selling. So this is kind of a supportive factor. But that doesn't mean that the rally we saw late last year, that pushed these stocks to big valuations. And certainly a stronger dollar is going to hurt certain stocks.
Well, you can see the numbers have come out in a lot of these stocks, and they've got killed. I mean, it's not just, a downdraft. They got killed.
Right.
You stay with us a second?
Yeah,
awesome.
Sure.
Andy Heck, Tom O'Brien, you stay right there, folks. We want to hear from you. Our phone number is 877-927-6648. Give us a call, folks. Dow Industrials right now are up 205. We got the... Where is she? There she is. Sorry. Dow's up 205. Nasdaq's up 41. S&P's are up 22. We're going to be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 208. NASDAQ is up 67. S&Ps are up 14 after the close out here. What we're going to be talking, folks, is Google's coming out with numbers, so it's going to be interesting seeing where Google can go from this point on. We have our man, Mr. Andy Heck. We're growling a problem with him. We're talking the markets. We're talking commodities. And don't forget, every Tuesday, Thursday, right after my program, 5 o'clock, Andy has a great show, 5 to 6 Eastern Standard Time. Now, as you come over to our website, folks, okay, what you're going to see right on the front page in the carousel, what are the energy technomentals telling us, okay? This is a great time to get a free report, understanding exactly what you would want to be looking at inside the energy market right now. So when we talk energy, man, you know, the whole world right now, Andy, is basically scratching their head.
I know, and that's why. And you know what? I have a bald head, but I'm scratching mine too.
I love it.
And that's why I scheduled this thing in February, because I think that we have another February 25th. I think that we have another month of difficulty, and I think that it's going to become a lot clearer over the next 3 to 4 weeks as we enter into kind of warmer weather, driving season. We're going to see more demand for gasoline, and I think there's going to be a lot of opportunities there. But I don't think we've bottomed yet. It's so hard, I mean, to pick a bottom in this oil market or natural gas or anything like that here. But I think it'll become clear in the next 3 weeks. But if you sign up for this workshop, which I'm going to go over, I'm going to concentrate mainly on oil.
Yes.
If you sign up, you get a free copy of my updated report on crude oil, what every investor needs to know, which goes over things, Tom, like crack spreads and the term structure and different location differentials and what you got to focus on here to see the clues, you know, because there will be clues. Right now, the clues still say going lower. Look, the 1 year, the March crude oil spread's trading at 25%. I mean, this is higher. Last time we spoke, last week, it was 20%. These spreads continue to blow out, which just means that there's so much supply nearby. We're at all-time highs in U.S. crude inventories. Cushing, Oklahoma, has the highs of, you know, since 12-month highs in terms of their inventories.
I know.
It's amazing. It's just amazing. And, you know, the shale, the whole Saudi thing, it's very political. I think they're not going after U.S. shale so much or Canadian shale. I think what they're afraid of more than the absolute production here in the U.S. is the technology that can eventually be transferred to places like Algeria, Morocco, where they can start this type of production. That's the real – they want to slow down the technology.
That's interesting, man. Yeah, right.
I think that's –
So what you're saying is that, let's say I'm Midwest, you know, the Balkan Shale, that okay, so they figured out the technology. You get in there with the technology, you start getting the oil out, right? So in these other countries, there's plenty of oil, but they just haven't been able to get it out. Is that what you're saying? You get technology? Oh, that's intense, man.
There is. That's why peak oil is
that's unbelievable, because what that would mean, folks, okay, is that just look down at your feet right now. The whole world, when people say it's awash in oil, we just may have oil underneath us everywhere, and that
it's hydrocarbons, and you know what?
And the world's made of hydrocarbons, right?
That's exactly right, and it's constantly producing hydrocarbons. So
that's intense, man.
They're worried about the technology. Now, I think that the focus of the drillers and the oil production companies is to make this technology cheaper. Because if they make it cheaper, the production becomes a lot cheaper. So I think that's where the focus is going to be. Well, and I think that the focus for the Saudis is to diversify.
Well, here, so, you know, I've been hearing from my geology engineer folks quite a bit. And you know what happened? And now this is a young guy, and I've told you about it before.
Oh, yeah, the guy from Calgary.
Yeah, and he worked for the Saudis for a long period of time. He's only like 32 right now. And he worked for the Saudis, though, right off the bat.
He worked for Aramco, huh?
Yeah, and and of course that was his big break. But then what also happened is that he said, well, what was really going on is that's even when the fracturing of the rocks was happening. He says that's where he got experience, right? Which it was like, wow, you got to be kidding me. Why? Make a long story short, bottom line is that the last oil drop down, folks, okay, 2007, 2008, that put everyone out of business. And he was telling me then, put them out immediately, too, okay? That was so vicious. The oil business needs big cash flows, folks, and they need those numbers. It's great when it's great, but when it crashes like that, it puts everyone out of business. So he was telling me about that, and I had met him after that. So he was telling me about that. I've been hearing him again, and he's been emailing me. In fact, he did it again today. And he was saying it's just as quick this time, Andy and folks, that they have to pull everything immediately. Now, in between that, and this is what's really crazy. So that's where the oil patch is right now. But in between that, when up until basically about 6 or 8 months ago, he was saying that they were so busy. And so watch what happens, folks, is that people raise money for these funds to drill wells, right? He was so busy that they had millions throwing at him and other engineers like that just to map out the fields. So the mapping out of the fields is the big thing with the fracturing. Like, they got to map out the little tiny holes and say, okay, we're going to blow this hole to this hole. And, so I can see what you're saying with the technology, because right now, his skill, there's not a lot of them in the context of how much money is getting thrown into that area. Do you know what I'm saying?
Yeah. You know what else is interesting about that whole fracking and shale business? When you drill a hole, it gushes. You find oil, it gushes, and then it's like a real declining production from there.
Right.
You have to constantly keep, and the reason they have a mapping is they have to constantly keep drilling new wells to have that gush, because, once it starts declining, it's not yielding.
Exactly. Right.
Exactly. So, this whole shale thing is very, hit or miss. It's not like the Saudis who go out in the backyard and they turn on the spigot and it just comes out.
I know. No, big time.
It's a different world. But, they're afraid I think the Saudis are afraid of that technology. I think it's very interesting, and I think there's going to be great opportunities. You just have to be really careful. Right now, I'm really nervous about anything exploration or drilling or oil services, all really not looking very good. But the refining is looking good to me. You got the gasoline crack spread has moved from $8 to $14 in the last week and a half.
That's huge.
That's a huge move.
In your experience, right, from commodity booms to bust to booms, is there any identifiable time frame when you look at that?
It's tough because, hey, when I first started trading in like 81.
Yes.
We went, it was 81 to 87, and then we had a little minor boom, particularly on the precious metal side, which lasted about a month.
Right.
And then it went, it went from 87, Tom, all the way to 2004, really, if you look at it. So,
okay, so
but I think that the world has gotten smaller, and cycles might be shorter. Now, I think we're in for a lot more volatility because of a lot of the events taking place in the world. And I think that it's harder to manage these economies. So I think we're going to see huge volatility this year all over the place.
Yeah, it makes sense. That totally makes sense.
And when it comes to commodities, you got to look at each one and their fundamentals. Look, base metals, I hate copper, but on the other hand, zinc looks very interesting to me here because the mines have been depleted. Nickel looks interesting because it comes out of Russia and Indonesia, both problem places. Aluminum is interesting because Alcoa and some other major producers have cut down on some production. So each one is different. But as a macro right now, this deflation's weighing heavily. And that's what we're seeing today. I think it kind of caught up with silver. Maybe there's a little manipulation in there or something. We'll find out in the next couple of days. But very, very interesting. I think copper is probably reflecting the economic health of the world. It's made lower lows, lower highs. We talked about this and how it's kind of flat lines now for a while. And then, it looks like it's going to go back up and then it makes a new spike down.
Yes.
That's kind of – copper is kind of telling me, hey, this thing is, so China has a cold and the copper market has the flu.
Yeah.
So,
and what we have here, so copper, folks, here 245.
I mean, the recent lows are like 241.70 or something like that. This thing is not really bouncing away from that. We broke through 272, and this thing has never looked back. 272 is a big level for copper. What do we get up to 260-ish? It hasn't. Papa Copper showed up. It hasn't come back in any meaningful way, and copper's kind of a bellwether here.
It definitely is. There's no doubt.
As I said to you, Tom, I watched this thing trade between 80 cents and $1 for most of my career. So the price is high here.
No, it is. It is. Listen, folks, don't forget, Andy's going to be coming on right after me, 5 to 6 Eastern Standard Time tonight. Come over to our website at TFNN. You can sign up for the free report right now. Andy, have a great one. Have a safe one. Look forward to the show, man.
Take care, Tom. Talk to you soon.
Stay right there, folks. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 216. You get the NASDAQ up 45. S&Ps are up 23. After the close out here, folks, a lot of numbers coming out. We're going to have Amazon, Deckers Outdoor, JDSU, PMC Sierra, QLogic, Riverbed Technologies, SolarWind, Synopsys, Visa, Wind Resorts, Biogen, and Google. So we get some good action after this close out here. Let's go to Stan in Framingham. Hey, Stan, what's going on?
Hey, Tom, how are you?
Doing great, man. How you been?
Good. Shoveling, a lot of snow.
Ah, man. Yeah, that's a fact, man. I hope you guys don't get that additional 2 feet on Monday, man.
Monday, I know.
That's
There's no
pretty,
place to put it.
And what happens, folks, in the Northeast, you know, one storm, they got a huge storm, and they can take care of that. I mean, they're used to that. But when you get one on top of the other with some cold weather, that freezes underneath it, and it turns into, you know, it turns into a problem for like 6 weeks, which is a bummer.
Right.
Yeah.
Miserable.
So,
anyways,
good old Raytheon. Let's take a look. You know, you work for Raytheon, right?
Correct.
Yeah. Okay. So, you get quite a run here, man.
Right.
You know,
it looks like it's pulling back.
Yeah, the low's 87, the high's a $111. So you're back today with 2.7 million shares. If we take this and this is a tough one right now because what you have is this. When I bring this up, you know, you have volume on the way back here. There's no doubt, but
right.
you're actually going into this. I mean, this. Let me put this on a weekly. We can go into this 95 area. So if we take a look at this, you know, you'll see that it's coming back into the March 03 area, in the January 03 area. And thus far, it's still on a weekly going to be with lighter volume. You know, thus far what we've done is we've done 9 million. And at 16 million, that's that 95 area right there.
Right.
So that's not that bad because watch what happens, folks, when I put this on a monthly. Now, when you put it on a monthly, what you have, it's a rocket ship number one. And this is where the danger comes in, but this is what you have, okay? Is that the monthly, when we went higher in October, you took out the October, well, even September, when you come up to the swing point. September, when it went from 95 to 103, you did 38 million shares. The next month, we did 44 million. Well, that was taking out the 40 million. So it's like, okay, you know, that's a 50-point ABC structure, and it's saying, okay, you get $1.40 in the stock.
Right.
The problem, so that's how that's set up on a monthly, folks. But where the problem comes, and I suspect you know this, Stan, is that the expansion has been so dramatic. It's like a normal correction on this can bring it down like to 65 in a heartbeat, which is like, oh man, that's pretty intense. Do you know what I mean?
Right.
So I don't know, you know, how it works when you work there, or how you can protect yourself.
You can't. Well, you just get out.
I see. Okay. So now watch this. This gets intense, folks. Man, this is intense. I'd protect myself then with half of it or something, you know, because the way this is set up is that it wants to come back. You know, today's the first get-go. Now that's on the technical basis. If you want to hear the fundamental basis, folks, this is a trip. So what happened? What got sent across the tape, literally about a half hour ago, right? Was that President Obama is going to come in with the budget, okay? And what's happening inside this budget, folks, is that what is inside it specifically is a resupply of the amount of missiles and equipment that have been used in Iraq, Afghanistan, Syria. So when I just read this, it literally just came across about 45 minutes ago, okay? And I'm reading this, and it's monster money. And so in that aspect, Raytheon is a large defense supplier. You know, so if it passes Congress, it's like you're going to get more business.
Right.
So I'd protect yourself. To cut to the trace, though, I'd protect yourself. You've had this is an amazing run, right?
Yeah, it is. It's been a great run.
Yeah. So
time to get out.
Yeah. When you get hit like this, because what you have is this: is that when you take a look at it, folks, what you have is that anyone that basically someone that doesn't work for the place that since last September, well, it puts them in a losing position in one day. And it's big volume. And when you break a swing, which we did, we broke the swing from December with huge volume. Today was 5.8, versus 2.
Right.
You can just have a normal correction. But because this stock has gone up so dramatically, well, a normal correction you don't want to stay in for.
Right.
It's been a one-way route.
All right. Thanks, Tom.
Okay, man. Have a great one. Have a safe one.
Have a good one.
After the closeout here, folks, a lot of numbers going to be coming out. If we go over it, and it's not that Google, no doubt, is going to be volatile in spades. When we take a look at Google, we're at 510 right now. Let's take a look at this. This equity is down from 600, I believe. Let's just see what she has. So we take a look. Yeah. So Google topped out July of this year. 599. You're at 510. The way that Google is set up right now, it's rejecting lower price. Let me put this up. But the volume is expanding. So the low of today, 501. Hey, that can get hit. That can get blown away. And it's going to be wild watching this shake out, because normally what you would look at is that you say, okay, you're coming down. You're making a nice hammer. It's hammering the bottom out, and it's rejecting lower price. And you can make the case that, hey, guess what? That wants to go higher. That case, with the expansion of volume, is a tough case to make for me. Because we've done 3.3 million shares. The last swing point out here had 2.3 million shares, and the one prior to that was 3.9 million. So the way that is shaken out, even with that hammer, is that, guess what? It's not good. It's been banging on this bottom. And, we've talked about the October 15th swing low for quite a while. This is one of the first equities that broke the October 15th swing low. The October 15th swing low on Google is 508.53. Google traded all the way down to 489. Did another counter trend bounce up to 542, and today we traded down to 501. It rejected that lower level. So we'll see where that whole thing is going to shake out right after the close. So you stay right there, folks. We've got a lot of numbers coming up after the close. Dow Industrials are up 210. You get the NASDAQ up 40. S&Ps are up 22. Gold down $29. Silver's off $1.13. And it's hard to believe, but you actually have GFI positive, and the rest of the gold stocks down 20, 30 cents. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Richard Bach. To bring anything into your life, imagine that it's already there. That's a beauty, folks. Market-wise, let's take a look at it out here. We had the Dow Industrials up 225, NASDAQ up 45, S&P's up 22, gold contract down $28.30, trading at $1,258 an ounce. Silver down $1.11, trading at $16.97 an ounce. Both gold and silver, folks, they got the metal down, but the equities, pretty amazing. The couple, yeah, they're off 30, 40 cents, but they're talking about $30, $40 stocks off 30 and 40 cents. Pretty amazing. Platinum down $34, traded at $1,220 an ounce. Copper down 2 pennies at $2.46 a pound. Light sweet crude flat at $44.55. Oil wants lower price, folks. Bonds, we have the ever-ready bond market. The 10-year was down 12 ticks, 130.03. Light volume. 30-year off 1 full point, 150.04. King dollar up 193 ticks, trading at 94.92. The euro up 36 at 113, and the yen up 75 at 118.29. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. We take a look at this future. What you have with the future is this. We're at 2014. Your cash S&P today, folks, got down to a price point of 1989. We closed out at 2020, and we hit that bottom with some volume. If we go over to the SPY and you want to take a look at this correlation, what we have inside the SPY is this. On your daily basis, the SPY right now is trading at 201.99. We did volume out here of 148 million shares. That 148 million shares was coming into the last swing low out here, which had 176 million shares. So you did have lighter volume on that aspect. If we come into the weekly volumes, what you also have is that thus far weekly, we've done 540 million shares, and that's coming into 940. So at this point, you basically have hit that swing point. You have lighter volume. We'll see whether that baby can bounce out of here. That's your S&P. We go over to the gold contract. Gold was so intriguing out here today, folks. This is what you had. They took the gold contract apart. Gold goes down $30. In that aspect, however, they couldn't take, and they didn't take, the equities apart. Now, what is really wild is this, is that you have the rollover of the contract that's happening in gold right now. We're basically, the liquid contract is trading at the, where am I? There she is. The liquid contract is the J contract. The J contract out here today did 229,000 contracts. That's coming into at 283,000 contracts. The GLD, if you want to look at that correlation, which is a little bit cleaner to look at, what you do have with the GLD is this. GLD came down, is trading at the 120.76 mark. We did 11.9 million shares, and that 11.9 million shares is going against 17.6 million. So inside that context, that's saying that, guess what? Gold still wants higher price. Bonds, we go over, take a look at the bond market. What we have with bonds is this. 10-year bond first. We take a look at the 10-year. What the 10-year has done is this. 10-year today pulls back. We're trading at 130.06. And this 10-year, folks, not only wants higher price, it looks to me like it's a lot higher price, too. We pulled back today with 1.2 million contracts. That 1.2 million is coming into 1.6 million. So it's a big number, meaning as you've gone up in the bond market, you've had the wide price spread, accelerated volume. You pull back, lighter volume. Now, let's go after the close out here. Lots of numbers, folks. The first one we'll tackle is Google. Google out here right now just come out with numbers. Google closed at the, if we just use the GOOG, that is at 510. That's what it closed at. Right now, it's trading at 488. Big downdraft, no doubt. And this is how the numbers go. Their revenue, bottom line, was shot. And the estimate on the revenue was 17.74, and Google came in at 14.7 billion was the estimate. They came in at 14.48. Big problem. The earnings per share, the estimate was $7.11. They come in at $6.88. Now, when you take a look at Google, it looks to me that, number one, that you have a large ABC structure on the way down. What you're going to see is that the high volume swing low that Google has is 489, and that's the December 16th swing low. Right now, we are trading at 492. That's going to be hammering that tomorrow with volume, and what that sets up is a very large ABC structure on the way down. That structure will take it down to about the 435 number, so it's a big number. Amazon, AMZN. Let's go take a look at Amazon. You just have the opposite phenomena happening with Amazon. Amazon came out with numbers, AMZN. Amazon closed at $3.11. That was up $7.80 for the day. Right now, it's trading up by $20 at $3.38. Now, Amazon, has come down way off its highs, though. When you bring Amazon back, what we have with Amazon is that the high in Amazon was basically in 2013. That was 408. Number-wise, this is what Amazon is saying. The revenue estimate was $29.68 billion. They took in 29.33, so they were a little short on the top-line revenue, which is pretty amazing. Bottom line, however, good old Jeff Bezos decided to make some money here. The estimate was 18 cents, and they came in with 45 cents. So they came in with some big numbers. There's no doubt about it. We go over to look at BIIB. This is Biogen. Biogen is also up after the close out here. Let's take a look at what Biogen has to say. Biogen closed out the day out here at $3.53. It's trading up $30 at $3.83. That's a monster, no doubt. And that's going to get over its highs. So Biogen, the estimate was $2.64 billion. They took in $2.64 billion. And the drug companies, they break down all the different drugs, but they're looking revenue 2.64. So they made it exactly. The earnings per share did beat, though. Doesn't have exactly what the beat is right now. Earnings per share view beats estimate. Okay, so here we go here. Fourth quarter revenue, $2.6 billion. Earnings per share, this is what it is. Earnings per share, $4 a share. $4.09, and the estimate was $3.78. We're going to have the yin and the yang out here in a big way, because what you do have inside the biotechs, of course, is the IBB. The IBB has been hanging at these highs big time. So we'll see where that shakes out tomorrow morning, coming into the market. The IBB, the high of that is 329. It closed out here today at 322. Decker. Let's go see what's DECK. See what we have with Decker right now. Decker. Oh, this is getting toasted. Let's see what this little baby, DECK. So this is Decker's Outdoor. They design, market footwear and accessories. That closed at $82.27. That is trading right now at $71. That's quite a hit. Big time. Yeah, that's quite a hit. Oh, and that's good. That's breaking out its bottom. Decker has volume off the high, actually, of 99. Yeah, she's blowing away her bottom at 77. This is Tom O'Brien. This is TFNN. You stay right there, folks. We have more numbers coming up. Dow Industrials finished up 225. NASDAQ up 45. S&P's up 27. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A lot of numbers out here. Let's go next. We'll go take a look at Avisa. Avisa just came out with numbers. We have Deckers Outdoors. That's getting smoked. That's from 82 to 69. We take a look at Visa. Visa's just the opposite. Visa closed out at the 248 area. That's trading at 258. Numbers like this go like this in Visa. Visa is going to do a 4-for-1 stock split, number one. Their earnings estimate was $2.49. They made $2.54. So bottom line is that you have an expansion, and that expansion is on the way up. You have Google, of course, is trading down. We have Amazon. Amazon is trading up. Amazon closed at 311. She's trading at 333. If we go over and we take a look at Amazon, let's see where she's shaking out here. So we put this on because Amazon has been on a downdraft for quite a while. This is an equity that topped out in the end of 2013. What you have with Amazon is that you're up $20 right now, and yeah, we'll see what kind of juice she's got. I mean, she came down off of this area with 5.6 million. So we'll see whether she can handle that on the way back up. She may. I mean, that's what that comes down to. What absolutely did happen is that the earnings, and this is where it just depends on how much Jeff Bezos is spending on expanding, warehousing, all of the above. He must have spent less because the numbers came in and they were big numbers compared to what they thought that Amazon was going to make. The estimate number on Amazon was 18 cents. They came in with 45 cents. Now, what's really cool, folks, is that would totally make sense that the Christmas quarter, right, the holiday quarter, that you'd be spending less. The reason being why? Because you have to be totally set up. He has to be totally set up for that holiday season. So he'll start spending like crazy again. That's just kind of how that whole thing it seems to be set up. We go take a look at MTW. This is, let's see, with this stock here. This stock here closed at $20 and it's trading at 21 right now. Let's see what they have to say. Okay, this is an industrial manufacturer of cranes and related crane products. The estimate out here, their sales was $1 billion. The earnings per share was 25 cents. They actually missed on revenue, and this equity is still higher. You're trading up at 20.84. This here, folks, don't even think about touching it. This is down from 30 bucks. It's a dead cat bounce. And you'll see there's a couple gaps in between it. And all it's doing is building cause to get into lower price. What we will have out here tomorrow, and this is where this is going to get pretty wild. So Amazon, folks, will put some juice into the NDX 100. Google is going to take some juice out of it. Google right now it's only down actually at $20, which is not the end of the world, by the way. What has happened with Google, though, Google, if we take a look at Google, Google has been in a downdraft. It was hammering its lows out here today with volume. And after the close out here, it's taken out that 489. Right now you're at 497, but it's traded as low as that. So what I expect you're going to see, it's going to be hammering into those lows, and we'll see exactly if it can get any breathing room. Let's go take a look at the gambling stocks. Wynn Resorts, WY. Wynn Resorts out here closed at 152. It's trading 152 right now. And let's see when they're going to be coming out. Oh, they're not. Oh, this is interesting. So they were supposed to report today, but they're not going to report to February 3rd. That's when they're going to report. The other winner out here after the close is one in the biotechs, which is one of the largest biotechs, by the way, which is Biogen. What has happened, which is intriguing, is that Biogen just went from, it's up $20, but it hasn't moved the biotech index. The biotech, it closed at 352. It's trading at 375, and if you go over to the IBB right now is still, oh no, it's just moved to $4. Okay, so the IBB was up 387 today. Now it's up. Now it's at 326. It took quite a while though. When I just brought this up at that commercial break, that wasn't at higher price. Let's go over and take a look at Apple. So Apple folks had come out with the numbers, great numbers. What Apple has been doing is that it's climbing up into its high. The last high in Apple is 119.75, and that high, it looks like it's going to get tested. We come off that high with 83 million shares. We did 83 million shares out here today. That's on the daily. If we put this on a weekly for a second, we take a look at a weekly. What we're going to see on the weekly is there she is. What we're going to see on the weekly, the last time we were up, she's going to have higher volume in the weekly. This is going to be a big number for Apple tomorrow. So we'll see how she's going to handle this high. But the way thus far what you do have is that Apple's pushing into that high with volume, which is going to be pretty wild for the NDX 100. Inside the market today, what was putting the juice inside the Dow Industrials, if we take a look at the Dow Industrials, what you have is that it was Boeing. Boeing was up $8.13. McDonald's, that's a dead cat bounce. They got a new CEO. That was up $4.49. Home Depot was up $2.88. That's real. IBM, dead cat bounce. That was up $3.93. Taking points away from the Dow Industrials today, which you had Chevron. Chevron was down 71 cents. You had ExxonMobil off 36. United Technologies was down 47, and Pfizer was off 12. The oil sector, the oil and gas XLE, that wants lower price, folks. Inside the NDX 100, we take a look at what was moving the NDX 100 today. You had Alexa Pharmaceutical was up $10.24. Tractor Supply was up $3.43. You had American Airlines up $1.62. That's after a dead cat bounce yesterday. Apple $3.59. Taken away from it, Qualcomm, that got destroyed. That was down $7.30 at $63.69. Yahoo was off $2.73. Vertex Pharmaceutical was down $7.12. And Comcast was off $79. If we go over to that, let's take a look at, there she is. I want to go look at the NDX, because I believe what we had here is the Alexa Pharmaceutical, ALXN. We go look at ALXN. This thing had a heck of a day out here. So we take a look at Alexa Pharmaceutical. She is trading at a... she's trading at 188. The spread on that today was quite a bit. The spread was 172 to 189. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials finished up 224. NASDAQ up 45. S&P's up 27. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow finished up at 225, NASDAQ up 45, S&P's up 26. Let's go over and take a look at Goldman Sachs. What's going to be intriguing here, folks, is that Goldman Sachs GS will now be the largest weighting structure inside the Dow Industrials. This is going to be wild watching how this thing shakes out. And the reason is that Visa right now was the largest weighting. You know, you have a $284 to $248 stock. But what's going to happen is that Visa is going for a 4-for-1 stock split. So what ends up happening with that, of course, is that it's going to bring down the weighting structure of that equity. So when you take a look at the Goldman Sachs, she's trading at 175. What Goldman hasn't done yet is come back down and test out this October 15th swing point. What it has done, it's right next to it, actually. The swing point from October 16th is 171.26. Yesterday, you got down to 172.97. Today, you bounced with light volume, and the low of today was 173.07. So we'll see how it's going to attack this lower level. That's on your daily. We put this on a weekly basis, and what you're going to see is that the weekly basis, may very well hold here. The way the weekly is set up thus far is that no, it's not going to. Okay, so watch this. This is pretty wild. The weekly basis, what you have is that we came down the week of January 16th. January 16th, we came down with 18 million shares. You hit a low there of 174. Last week, you came down with 16.7 million. This week, thus far, we've done 11 million. What hasn't been hit yet is the swing low. This 171.26 going to be hit. So that's going to be a heads up in the context of how the indices get shaken around a bit, because what we will have, of course, with these splits is that the weighting structure is crucial to understand as to how equities move. And what we have had is that IBM, of course, has been a huge drag on the Dow Industrials because that also is a very large weighting inside that area. Now, let's go over and take a look at the XAU and the HUI. Why? Well, what we've had out here today, folks, is this. The gold market, physical gold, came down $30. Silver came down $1.13. That is a monster number. Percentage-wise, folks, silver was down 6.29%. Gold was off 2.3%. But when we look at the aspect of what that has done to the equities, well, they didn't move. They didn't back down, which is really different, I'll tell you that. You don't see that happen when physical metal gets toasted. Bottom line, most of these equities gets toasted also. If we take a look at the HUI, what you have out here, it's absolutely amazing. The HUI came down today to a price point, and that's the Gold Bugs Index. That came down to a price point of 191.28. We did it with light volume and rejected lower price. You know, the low of 2 days ago, folks, 4 days ago, was 189.71. So bottom line, what that sets up is that that's going to be setting up higher price. It looks like these babies are in an ABC structure on the way up. We take a look at now that's the HUI. We take a look at the XAU. XAU, same type of setup. It's rejected lower price out here today. We got down to a price point of $75.35. Bottom line, rejected it, closed out at 77.13, and monster number. And particularly it's a monster number because of the way that the metal traded down and they couldn't whack the stocks. Now check this out. Now silver, and we own the stock. I own the stock. Many readers of the Gold Report own the stock. It's Pan American Silver, PAAS. And I want to show you something because this is crazy. So this is a silver producer. That's all they do. And, you know, fundamentally, they take in quite a bit of money, okay? You take in, you know, $185 million a quarter. So silver gets whacked today. This stock only came down 18 cents. We came down with 2 million shares, and the 2 million shares is going into 3.1 million shares. There's no sellers inside of the silver equities or the gold equities. So we'll see how this, meaning not just this equity, how the metal trades out versus the equities in the next few days. But thus far today, what you had is that the equities held up in an incredible way versus what happened inside the actual physical market. Pretty amazing. Synopsys just come out with numbers, SYNA. Let's go take a look at the Synopsys. Synopsys had closed out here at a price point of 68. That's trading at 73 right now. Let's see what they say number-wise. So number-wise out here after the close, folks, you have a lot of equities that have been trading up. That's up $4. Numbers go like this on Synopsys. So first off, Synopsys, what they do, they custom design user interfaces, solutions. Number-wise, this is what you have. Their revenue is up 125%. Their earnings, their net revenue is $463 million, and they made 52 cents. So the estimate versus what they took in was 13 million more. The estimate was to 450 million. They took in 463 million. The earnings per share estimate was 124. They took in 146. So bottom line is that they got some numbers going. They closed at 68. It's trading at 73 right now. And this is another equity that you don't want to buy. This is off the highs in a pretty dramatic way. The last high out here was $100, no, $87. It's gone straight down from 87 into the 58 area. You know, you're doing a dead cat bounce now, and what's happening is that it's dead cat bouncing, folks, against where it had gapped down from. The last time this came out with numbers, I suspect October 23rd, you gapped down from $75 into the 61 area, made it back up, filled the gap once with dramatically lighter volume, by the way. We did 480,000 shares versus 2 million and 6 million on the way down. You know, we'll see how that shakes out tomorrow morning, but thus far, that's how that is looking, meaning that you have a dead cat bounce that's going on. Google's going to be the big number tomorrow morning, too, by the way, because what you do have is that Google's been down big, but what also happens with Google is that the volatility, I expect, is going to stay here, not, you know, tonight and tomorrow morning. So Google is traded, let's see, gee. I know it's not flat. It's telling me it's flat right there, but it's not. So if we actually look at real trades, Google's been as low as 489, 490, and right now, if that's real, it's trading at 507. Yeah, it looks like it's trading at 507. Maybe they're starting a conference call. So we'll see where that shakes out. What we will have with Google is this. Google got into a low today, had high volume, spiked to this low intraday, no, after close rather, and that basically is saying that it's going to be right back down there. What is intriguing when you read some of the write-up in Google, a lot of this has to do with the aspect of mobile. Fourth quarter sales and profit missed estimates as the web's company advertising business faced more competition on mobile devices. Mobile devices, folks, are the new computers. It's overtaking the aspect of computers. It's not that we're not going to have computers. We all have computers. What has happened, however, is that your mobile device is being used more and more as a computer for the simple things that we do. And what definitely happens is that these softwares companies have phenomenal software, but we don't use a tenth of what the software is made for. And the mobile application is so cool because once you get used to it, you can bring it everywhere, and that's where this whole thing is going. And I suspect, as you grow up, the younger folks that are growing up on that mobile platform, forget it. I've watched them go through it. It's fast, it's furious, it's all the above. This is Tom O'Brien, this is TFNN. Don't you forget, folks, coming up after my show at 5 tonight, we'll get our man, Mr. Andy Hecht. He's going to be growling and prowling with you. Going to be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow Industrials finished up 2 1/4. You had the Nasdaq up 45, S&P's up 28. You know, and after the closeout here, you have quite a few stocks that are trading not just higher, dramatically higher. You have Visa. That would be the first one. That's trading up $10. We closed at $2.48. It's trading at $2.57. They are going to do a 4-for-1 stock split. That, of course, is putting some juice into it. Their profit did go up 11% also. They also estimate that their spending is going to climb. Visa, the world's largest payment network, posted fourth quarter profit that beat estimates. The company also announced the 4-for-1 stock split. Net income for December 31st rose 12% to $1.57 billion. Bottom line is that, you know, there's nothing like a credit card, folks. Credit card fees absolutely are huge. There's no two ways about that. When you do take a look at it, the high in Visa this year has been the $269. That's where it's trading. That's going to go 4-for-1. Amazon, we go take a look at Amazon. Amazon, the revenue number was light. The earnings per share number, though, Jeff Bezos spent less money, was dramatically higher. Amazon closed at $311. That is trading at $337 right now. Decker, this is just the opposite way. This is getting toasted. Decker's Outdoor, that closed at $82. That's trading at $70. This is a designer of footwear. So that's downtown. SYNA. This is Synopsys, I believe. That closed at 68 rather. That's trading at 75. That's a dead cat bounce, that one. Don't touch that baby. The revenue was up 125%. The earnings per share was $1.46, but that looks like it has some big problems. One of the biotechs, the largest biotech out there actually, is up $25 right now. 25 bucks. That closed at $3.53. It's trading at $3.78. That's Biogen, and numbers on Biogen go like this. The estimate was $2.64 billion. They took in $2.64 billion. So they basically hit that. The earnings per share, however, they beat on the earnings per share. Biogen had closed at $3.53. That looks like it's going to get over all its highs. So let's see what this looks like. Yeah, it's going to, okay. So let's look at this one. This is going to be an intriguing one, and particularly for me, because what happens is that in the daily newsletter, we are short the IBB and long the BIS. So if we take a look at this, watch what you have here. It's going to be wild watching this shake out. So BIIB. If we put this on a monthly, what you're going to see, actually the weekly is fine. You're going to see this week thus far, we have done 5.3 million shares. And what it's going to be going into, it's going to be going into its swing high from March 21st. That March 21st swing high of 358, that had volume of 11.5 million. So we'll see if, in fact, we can get 6 million shares into that equity tomorrow. Would that be right? Yeah. So you need 6 million shares when this baby, I believe it's never done 6 million shares in a year, in one day. No, it has. October 22nd, it did 7 million shares. So we'll see whether it gets into it. and how it gets into it. What has happened after the close out here, because Biogen is going so high, if you do look at the IBB closed at 322. It's trading up $4 right now at 326. The high in the IBB is 329. If we go over to another large weighting inside the biotechs, folks, inside the IBB, of course, is Amgen. Amgen had come out with numbers that closed at 156 today, and Amgen just can't get any juice behind it. So Amgen basically wasn't a drag on the IBB today, but it certainly didn't bring it on the way up. Celgene, CELG. Celgene is another mover inside that IBB. What we had with Celgene out here today, Celgene was up $1.90, and she rejected lower price. So, what we're going to, and in particular, folks, the NASDAQ Biotech Index is a big number in the aspect of the weighting structure inside the NDX 100. So the NDX 100, I suspect what we're going to have out here tomorrow morning is some big volatility. And the reason being is this, is that Google is traded all over the place. Google closed at 510, bottom line is traded down at 489. That's a large weighting structure inside the NDX 100. Now, that would be the bad part. The good part would be Amazon is also a decent weighting structure. That closed at 311. That's trading at 336. The larger weighting on the NDX 100, more than likely tomorrow also, will continue to be Qualcomm. Qualcomm closed at $63. That was down $7.30. Monster volume. Qualcomm, this is the second gap away for Qualcomm. Qualcomm right now is trading back to where it was trading like 3 years ago, which is pretty amazing, actually. Yeah, so if we look at Qualcomm, Qualcomm's trading where it was trading in February of 2012. You came down with volume, and if we take a look at this and we put this on a monthly basis, bring this into a monthly, what you're going to see with Qualcomm, okay, we're at 63, and she is going to be running into the highs of September of 08. Oh, this is pretty intense, man. That's pretty crazy. But that's where it wants to go. So Qualcomm broke down pretty quickly. Qualcomm's trading back where it was trading in February of 2012. That breakdown occurred in the last 6 months. The first place that it has any type of heavy support is actually down at 63. 63, it would be the highs of how it went into the lows of 2008. So that high bar there is 56, and then it just went down 4 months in a row and went down into that 23 area. So you stay right there, folks. I'm Mr. Andy Heck's going to be coming up next, growling and prowling with you. And don't forget, folks, Andy also has a great report. You can get it for free right on the front page of TFNN. Dow Industrials finished up at 225, and always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Andy's coming up.